All right, guys. Good morning. Good morning. Hope you guys are doing good today. It is Tuesday. It's not Monday. It's Tuesday. Yeah, Nasdaq, S&P down, Nvidia down, tech is down. Nasdaq sitting at about 23,247 right now. Kind of slow. I mean, markets are down a little bit in fear. I think everybody's worried about this labor report tomorrow. Or not tomorrow, I'm sorry. Tomorrow we actually have the JOLTS job report. So tomorrow we do have a labor report. But it's not the big one that everybody's scared of. But it's still relevant. Today we have, I believe, let me see. I think it's, yeah, today we got ISM manufacturing PMI at 10 o'clock. Tomorrow we have the JOLTS job opening report expected at 7.4 million for JOLTS. We've got factory orders, beige book, a couple Fed speakers. Thursday we got ADP non-farm employment change, jobless claims, the trade deficit, ISM services, and more. And then Friday we got the unemployment report. So we got a bunch of stuff going on this week. Markets are fearful, I would say, of all this stuff. Graph, Fernando, Billy, K9, Rambling, ND, Game, Caesar, R, Pawn, Hunter, Rick, Ace, Ava, Marco, Trey, Ray, Lost. What's up, guys? Good morning. Very nice, man. What happens if we get a really bad report or really good report, Fernando? I mean, a really bad report is going to increase the odds of rates. If we take a look at yields this morning, if we take a look at yields, a good report might push back rate cut odds, to be honest. Yields are elevated this morning, which is going to happen sometimes when the market goes down. But we are back up to 4.3% from about 4.2% Friday. Again, Friday we were at about, look right here, 4.21. Now yields, and remember, interest rates and yields follow each other. Now we are up to almost 4.3%, 4.285%. So showing a little bit of a higher interest rate sentiment. If we take a look at rate odds here, they're still looking pretty solid. They're at almost 92%, 92 to 8% likely that we're going to get a 25 basis point cut this month in September. It is September. Will we get a September slump this month? That's the question I'm going to ask for the poll. Yeah, I got to put you in timeout there, Fernando. That's kind of a crazy comment. Will we get a September slump? Vote on the poll. Let me know what you guys think. All right, a couple things came out. Again, Nasdaq, S&P, Dow all down today. Futures down following the Labor Day break. So most things are down this morning. Caution is kind of the theme, I would say, of the day. Markets are bracing for the big unemployment data, labor report data on Friday. 10-year yields climbed higher, like I just showed you guys, amid growing expectations of a Fed cut. While gold hit record highs. So yeah, look at gold. Gold all the way up to 35.50 from the previous all-time highs, 35.78. We're still not up there yet, but if you take a look at it, gold did hit this early this morning. Gold hit all-time highs at 34.78, the new all-time highs for gold. We've had some news. Again, Nvidia down 1.6% after earnings last week. China AI chip maker competition potentially causing them to drop. Other chip makers like AMD, Taiwan Semiconductors, and Broadcom are also down. Neo, which is an EV maker, is up 2.4%. Good delivery numbers. Biogen up 1.3% following FDA approval of Alzheimer's treatment. Newmont up almost 2% as gold hit new all-time highs. Corning is post-UBS upgrade up 1.7%. Nestle is down after dismissing its CEO. Kraft Heinz plans to split into separate entities. Novo climbed after data showed its weight loss drug significantly reduced cardiovascular risk. All right, guys. Yeah, and so again, 92% likely that we cut rates next month. But this week is going to be like the final. This week is going to be like the final tell of whether we're going to cut rates next month, because once this report comes out, yes, we do have CPI next week, which is big. But once this report comes out, it's kind of like a much more sure thing that we're going to cut rates. Again, Russia's energy exports remain strong despite sanctions. Chinese president hosted North Korean and Russian leaders, signaling realignment outside Western spheres. Markets are watching for any macro implications of that. A federal appeals court invalidated several of the president's tariff policies, although they're still enforced during the appeals process. The decision does kind of cause some questions on outlook. You know, another thing they're still debating is that the Fed's independence, you know, whether the president's attempt to remove Governor Cook and nominate Moran, however you say it, Stefan, legal scrutiny persists. Again, the dollar is down despite a weaker tone tied, or the dollar is holding, I'm sorry, despite a weaker tone tied to potential easing. We'll see what happens here, chat. Interesting day. Yeah, again, vote of the poll. 66% of people think, yes, we will get a September slump. We kind of already are. I mean, the market's down today. It doesn't mean it's going to continue down, but markets were red when I looked at them last week. Yeah. Interesting week for sure. And again, we got a lot of stuff that's going to decide or really confirm or potentially push back rate cut odds. Again, JOLTS tomorrow expected at 7.4 million and drops at 10 a.m. That's a big report, a relevant report. Thursday's ADP non-farm employment change is kind of prelim payroll numbers. We get the final payroll numbers on Friday, but Thursday's prelim payroll numbers are expected at 75K, which is a pretty small number. We got jobless claims expected to increase as well on Thursday at 231,000 expectations versus 229 previously. The trade deficit is expected at minus 77.8 billion. We got ISM services. Services are looking okay though. They're expected at 50.5, which shows a slight expanding services sector. Today we have ISM manufacturing, which shows, you know, a little weak manufacturing, 48.5. And so a little bit of a, you know, decrease. And again, this month's unemployment report, the expectations. Last time it showed in very low at 73. This time they're expecting it pretty low as well. So this month's payroll report is only expected at 75,000, which is very low. Unemployment expected at 4.3%, which is higher than last time at 4.2% as well. So, you know, we got some stuff. And then next week, again, we got CPI inflation next week. So Optimism still on the sidelines. Do you think we're in for a couple months of downward trends in the market? I'm not sure. I really don't. A lot of the time we move down in September. Not always, but a lot of the time we do. And so I'm not going to say we're in a September slump, but we're certainly red, at least the first day of September here. Doesn't mean we're going to continue to be red, but we're certainly red. Again, we'll have to wait and see. But most things are down today, to be honest. And that's just kind of how it goes sometimes, I think. Let me check other stuff to make sure. You know, there's also rumors of like shutdown talks, to be honest. Like they're, you know, people are worried we're going to get a government shutdown. That's kind of looming here as well. We had European CPI that showed up today. I believe it was today. Yeah. We had European CPI show up today. It showed up slightly elevated year over year for core. Core showed up slightly elevated 2.3% versus 2.2% expected. The rest of it showed up as expected, basically flat. And again, today's manufacturing PMI data is relevant too. Yeah, gold's pushing this morning. It broke all-time highs. It's kind of pulled back some. You know, the previous all-time highs was about right here, this big green line. And you can kind of see it's acting as some support. Yeah, Nasdaq's down about 1% today. Yeah, so the president has an announcement at 2 p.m. Eastern time. Amazon's down after Amazon shares are dipping on slower Prime signups. Amazon's down 1.4% in pre-market. Reuters reported U.S. Prime memberships rose 5.4 million around Prime Day, about 2% below last year. So Amazon is down a little bit, sorry. 30-year yields rise as high as almost 5%, highest since July. And that's basically stimulative expectations, right? Like they expect the cuts next month because like odds of a rate cut have increased. And so they expect the cuts to stimulate the economy. And, you know, ultimately that made yields rise a little bit. Again, spot gold. Past the April high it made. And yeah, that's basically the market right now. Pepsi says Elliott has roughly a $4 billion stake in Pepsi company. They're going to push for changes to boost their share price. Stake in Pepsi is one of Elliott's largest equity positions ever. And so they're planning major activist campaign with $4 billion stake. I'm looking at anything else that might be coming out today. What do we have for earnings this morning? Hold on. Okay, we got NEO reported 32-cent loss versus 30-cent loss expected. Revenue of 2.65 billion versus 2.76 billion. So NEO missed both. We also had Signet Jewelers report earnings. Nothing big though. Dollar Tree tomorrow morning. Macy's, Campbell Soup. Salesforce, C3AI tomorrow as well. We got Broadcom on Thursday after the bell. Lyft is announcing private offering of 450 million of convertible senior notes. Zscaler upgraded at Morgan Stanley ahead of earnings. China's meeting with Iran president in Beijing says China attaches great importance to their repeated commitment not to seek development. Goldman Sachs raises its Q4 iron ore average price target to 95 tons. Previously sold 90 tons. Yeah, that's basically it this morning. It's quiet. Markets are down. And, yeah. Today we have ISM manufacturing PMI at 10 o'clock. That's the biggest thing. Which it could move things. I mean, it's a gauge on manufacturing in the country. Services might move it a little bit more, I would say. But ISM manufacturing is relevant. It drops at 10 o'clock. Again, NASDAQ's breaking down, testing these lows again. Let's see if this previous support at 23,235 rejects it. Yeah, how about that LSU game? I'm sorry, Clemson. You know, LSU did that. It was one of those games I was nervous about, too. I was watching it. I was nervous. The refs had some bad calls. I was nervous. Yeah, Bama lost. LSU won. A good weekend, kind of. I mean, I want the SEC to do good, but look at Nvidia. Nvidia is the really one driving this redness. Look at Nvidia; it's down to 170s now. Looks weak. Microchip fears. I made enough on for the next 2 months of my lifestyle. You're not one of those guys that tries to live off of betting, huh? I've said this once, I'll say it again, bro. You're gonna find people who essentially try to, like, I'm not gonna say they're scamming you. They're just seeing if you're dumb enough to buy their picks, right? But the people who make money in actual sports betting are doing it almost like arbitrage trading, you know? And if they're good enough, they get booted off their platform, right? They get booted off wherever they're used. And so if the person you're following doesn't get booted off, they're not as winning as you think they are most of the time. There's so much variance with sports betting. And you got all these guys online acting like they're gurus, trying to charge people $500 a pick. Like, it just gets ridiculous. So hopefully you don't fall for that. It's just kind of a really sleazy market of people trying to sell people these ridiculously overpriced picks. It's kind of like the variance is so high. Again, the edge is low, the variance is high. The only people that do it successfully are people that literally like trade it or arbitrage it most of the time, kind of like you would trade stocks. And even then, if you do that well enough, you get kicked off. So just be careful with that. Just be careful. I'm not saying you can't do it for fun. Do whatever you want to do. As long as you got the money, it's all good. Make the game. You know, occasionally I'll do it just to make the games more exciting, but it's not a lot. It's like $20, you know. I do it with MMA mostly, with UFC, but still, I'm not buying picks from nobody. I know the market well enough, and yeah. Constellation Brands just updated their guidance. Fiscal year 2026 adjusted EPS view is now 1160 at the top end of the range. Expectation of 1369, previously of 1260. So they missed their guidance big. I'm assuming they're down FTZ here. Constellation Brands. Yeah, look at how much they're dropping. They're down to 155 right now. That's because of this number. Big miss. Yeah, I mean, the thing about it, though, is that, like, bro, like, these companies online that are taking your bets, right? Like, they literally hire mathematicians to do this. Like, mathematicians to create these odds. And the funny thing is that you got these people who are genuinely acting like they can beat some of these mathematicians regularly, you know? And I'm just telling you, you're probably not going to. And even if you can, they're going to kick you off the platform. And so it's a losing effort, regardless of which way it goes. And so just be smart, you know? Yeah, markets are down. It's the September slump right now for sure. Markets are down. Gold's at all-time highs. Nvidia is driving this move, but Amazon down after missing Prime Day numbers relative to last year. They're down to 225s. It might be time for me to start trying to buy some stuff up. I don't know when I should, but McDonald's also announced that they're celebrating the return of extra value meals with $5 sausage McMuffins with egg meal and $8 Big Mac deal. I haven't been to McDonald's in years. That seems kind of expensive. A $5 sausage McMuffin? $8 Big Mac, bro? What is that? Is that good for McDonald's? Sounds expensive. Yeah, if we take a look at the Dixie here, gold up big. Dollar spiking up. Rate cut odds increasing. Long-term yields up on that, which shows that they think that this is going to be stimulative for the economy. Again, jobs data later this week is critical for Fed expectations on rates. It's what everybody's going to be paying attention to. Central bank independence is in focus. Interest rate decision under scrutiny. Gold is at record highs. AI chip sector is down. You can see Nvidia. Amazon's down on worst prime numbers. There's tariff rulings that are scaring people. Global alignment adding to uncertainty. Still, we're showing 92% chance of a rate cut next month. And we'll see if we get it. I'll look to trade, but... yeah, apparently I look like everybody. I hear a different person that I look like every day on stream. Apparently I look like everybody. Next Era is going to meet with investors throughout September and in early October to discuss, among other things, long-term growth rate expectations. Yeah, I haven't eaten McDonald's in years, genuinely years. And I always like their breakfast. But after a certain point, like, too many preservatives. And now it's cost the same amount as other stuff. Like, the benefit was that it was cheap. Now it's not cheap. Why would I go get that again? It just doesn't make any sense. $50% of my portfolio in cash in case a big crash comes. Yeah, I mean, I don't think that's necessarily a bad idea. Like in real estate, I'm waiting to buy my next property until we get some type of correction. And maybe we won't get one, and yeah. All right, so Raymond James says the S&P rally faces key tests after Labor Day. They warn the U.S. equity rally, driven by strong earnings, lower yield, and lower oil prices, will be tested in the next few weeks. Risks include geopolitical tension, new jobs data, and bond market reactions to the court ruling for the president. They also flagged fading momentum in AI, citing concerns over weak new models, stalled projects, though cloud spending remains strong. So they expect mid and small cap earnings growth to pick up late this year and early next year, but caution, similar optimism a year ago didn't pan out. This holiday music in September again, man. Come on now. Yeah, Five Guys is expensive, but it's good. I like Five Guys. I mean, AI can do a lot of people's job. It just depends on which job. And it depends on which AI system. Honestly, a lot of hype around ChatGPT, but I don't necessarily like ChatGPT for it. I like Gemini better. There's other better versions too. Like I like the other AI systems, not ChatGPT. ChatGPT is the least accurate one. And so if that's the only one you use, and I think that's the only one people know about, but there's other better ones, to be honest, in my opinion. I love the people who have large cash waiting for a large dip. Yeah, I mean, I don't think people should sit on cash for too long, but I also don't think it's necessarily a terrible idea to, in a specific market like we're in now, right? Like this market's a little different, I would say. Things are extended. There's fears of a bubble, and I would say it's okay to wait in certain moments in the market where you look, it looks extended. You don't want to be too overzealous buying either. And specifically in terms of like real estate, I think it's okay to wait because you can get some good opportunities if you wait, but you just gotta wait for it. And again, I don't know what's gonna happen. I tell people this every day. The only thing I'll say is I don't know what's gonna happen. We'll have to wait and see. It really depends on the reports that we get over the next few weeks. This week we got the labor report, which is the big report. Next week we got CPI data, which is the big report. The week after that we get the Fed meeting and the decision on rate cuts. Yeah. Gold and silver mining stocks are up 100 to 400% year to date. Copilot is GPT. Or no. I think Copilot is ChatGPT. Oh no, never mind. Okay, yeah. I mean, they're basically the same thing. CPI is Thursday next week. Thursday. PPI is actually the day before, which is interesting because the last report that really shocked the markets was the PPI inflation report. Look how muted markets are right now, though. I don't know if it's the long weekend or not, but look how muted this is. I mean, we're down, but now we're just sideways. Like, look at this. We're not really doing anything here. You know, this is the market. How can I trade this? Yeah, we got Broadcom earnings this week. Big tech. That might influence things. We'll see. Sold 30% a couple weeks ago. Like maybe there's a gold option, but I have to look at everything else. Yeah, so the president speaks at 2 p.m. on Tuesday today. His first public comments in a week. They're going to have to do with the Department of Defense. Isn't he changing the name? This is what I don't understand. Like, okay. And I'm not just disagreeing, because, like, there's some things he does that I agree with, right? But why would you change the name to what he wants to change the name to? You know? Like, if anything, he should be moving it away from what he wants to change it into, not towards what he's trying to change it into. You know what I mean? It seems more antagonistic. Like, why? At least that's the rumors. I don't know if he's actually going to do it. And again, there's some stuff he does I agree with. Like, but this ain't one of them. This just seems like an unnecessary like waste of time. Yeah, I mean, we got manufacturing PMI today. All right, let's put this up. All right, so expectations for manufacturing PMI today are expected at 48.5. 48.5. Previous of, what was it last time? It was 48 last time. All right. Microsoft. Yeah, Nvidia's down, Microsoft down, Meta down, Apple down, Amazon down, Google down, Netflix down. All tech is mostly down today. Not all tech, but big tech. And the markets are quiet. This is boring. Maybe I'll trade gold. I'm looking at gold right here. Gold at least has a better trend. It's kind of correcting a little bit since breaking all-time highs late yesterday. Now it's down. Yeah, we should be monetized. Should automatic. Yeah, we're monetized. Yeah, Tesla. Tesla's down. 330s. People are worried about this labor report. Again, let me break it down for you guys. Why things are fearful. And I've been talking about this since last week. Right? But markets are fearful right now because one of the things that scared markets over the last month, really is about a month and a half, is that the last FOMC meetings, what was that? Like a month ago. A month ago, we had the last FOMC meeting. Jerome Powell was incredibly, I would say, hawkish, data-dependent, restrictive. He said we're lucky he doesn't raise rates. And then we got a really, really bad, and the president, of course, is pushing for Jerome Powell to cut interest rates because, the president wants a thriving economy. He's, and all this stuff, which is understandable. I mean, I'm not saying we should or shouldn't, but every president essentially wants, they want that as a bragging point to their presidency. They want a thriving economy. They want to say, hey, look at the economy under my watch. Look what I did, basically. Every president does it, both sides. So, anyways, the only roadblock to that has been the labor market. Prior to this latest revision that we got, showed a thriving labor market. It showed the labor market coming in for May and June, 120 plus thousand. It was actually like over 110. It was like 110 to 120,000. Strong labor market, showed resilience in the labor market. And so that was Jerome Powell's arguing point. He said, hey, basically, the labor market's strong, according to the data. And of course, the president on the other end of that saying, hey, bro, you should have cut rates a long time ago. Then we got this big revision to the labor report. And the revision revised jobs down for May and June. Just for 2 months, 260,000 almost, 258,000 to be exact. They revised them both down from over 110,000 all the way down to like 15 or 20. Like anyway, somewhere between 15 and 20 for both months. Big weakness. And then that actual labor report for July showed up and it was weak as well. They expected like 100 or 110. They showed up at like 73,000. So then that report came in lower than expected as well. And so that kind of tipped it towards very high chance of a rate cut this month in September on the 17th. Now the odds for a rate cut are up substantially. They're at 92 to 8% likely of a 25 basis point cut. And then we got a PPI inflation report last time that showed a very high number for PPI inflation, almost 1% inflation growth in producer prices month to month. That freaked a lot of people out. And almost 4% year over year. It freaked a lot of people out. and now we are heading into another labor report. The first labor report that we've gotten since that really, really bad one last time. And again, considering how much that last labor report influenced odds for rate cuts, this report could do the same thing. You know, if this report shows up really strong, really weak, you know, it might mean good or bad things. If it shows up neutral, you better believe we're probably going to continue on the path that we are now towards rate cuts in September. But again, it is expected on Friday. And we get the prelim numbers on Thursday. Usually the prelim numbers will come out Wednesday, but because it's a shortened holiday week, we get the prelim numbers on Thursday. But the payroll report expected at 74,000. That's a pretty low number. Honestly, my guess, unless we come in and we just beat this number by a huge margin, like 100% better, like we show up at 150K, unless we do something like that, I'm guessing we're cutting rates this month. You know, I couldn't imagine us not cutting rates with, even if we show up as expected, that's still pretty low. 74,000 jobs, that's pretty low. That's pretty low. Also, I believe it's next week they're expecting a revision to these numbers, a year revision, like the fiscal year revision to these numbers. And there's rumors, especially Goldman Sachs thinks that they're going to revise it between 500,000 and 1 million down. And if that happens, honestly, that's going to contribute to even better odds for rate cuts this month. But the question is, how does that initially affect the market? I don't know. You know, the risks of cutting rates too early is inflation. And we've gotten a lot of inflation over the past 5 years, but also rate cuts are supposed to be proactive. So we're supposed to cut them before we really like head towards a recession. And so it's a balancing game here. And let me know what you guys think we should do in chat right now. We are dropping today mostly on microchip fears, right? The market's down. It's also September. It's the first day of September. NASDAQ, S&P down. Microchips are down. Tech is down today. Basically fearful of the labor report later this week. Remember, like, people always expect some big, like, huge reaction the moment when data comes out. The real moves are happening the weeks prior, like right now. And so this could be getting people baked into the labor report. Either way, a lot of people are going to argue it's not necessarily good. You know, we get a super strong labor report. It pushes back odds of rate cuts. We get a really weak labor report. It shows negative signs for the economy, right? So either way, I don't know. You know, sometimes we have good is good and bad is good. I think this situation is bad and good is bad, personally. But you never know. Again, we might be getting baked into that now, and then we might move up from the labor report. A lot of variance. We do have some news that showed up that said 9 borrowers have already announced new U.S. high-grade bond sales overnight, and by the end of the session, a total of 25 borrowers expected to raise fresh capital in the U.S. primary market on Tuesday, according to Bloomberg. I don't think we're getting 50 unless the labor report shows like deep weakness. So I don't think we're necessarily going to get 50 unless the labor report shows weakness. I would trade this, guys. I kind of want to short. I might short right here. Let's try. Hold on. All right, we're in 2 contracts here. I'll let this play around. See if we break down a little bit more this morning. It's early. Small positions. We'll try. Yeah, maybe it's time for a rebound. I don't know. Yeah, oil's up today because of overseas stuff. Broader geopolitical risks. Oil tends to react favorably to that. All right, so we're up in this trade. Trying to break down. I'll let it work a little bit here and just try to, you know, we can hold this close to break even now. Time. Honestly, at this point in time, we mostly had chop this morning. I mean, we broke down early, but nothing's really going on. Go. Every time I feel like I'm going to take profit, the market reverses. All right, I'm going to take half off here. Just because we're up so much already. Might as well. Microsoft is offering U.S. government over $6 billion in savings on cloud services over 3 years, according to CNBC. There we go. I'm just going to try to let this keep dropping here. All the rest break even. Nice. Yeah, I think most people see the red weakness. I'm gonna cut it right here if I can. Yeah, we're out. Not a bad little opening trade today, very small. It's early, guys, it's early. It's not even 8 a.m. yet. NASDAQ looked weak. Yeah, I mean, yeah. Underreaction here. A lot of people were worried about a tech bubble in microchips. It's possible. It's certainly possible. Again, I talked about it before, but in 2000, we had the dot-com crash. And that was because a lot of wild valuations and internet companies, right? But the internet was that next big thing. Like, if you look at the internet now and you look at the influence the internet has had on the world over the last 20 years, 25 years, the internet was that next big thing. But we still had a big bear market from it that lasted for years. And so it's possible we get that now. And again, I think the people that are going to do the best, and I'm going to preface this with like, look, I'm not an investment professional. I'm not liable if you lose. Always make your own assessment, trade smart. I can't guarantee anything. Understand all this stuff on screen. Can't guarantee anything. Not an investment professional. Don't copy me. Might have no idea what I'm talking about. Might be wildly wrong about everything. Don't copy me. With that said, though, I think the people who do the best are going to be the people that buy into it over time. NASDAQ's starting to flush down some more here. Look at this. Looking at our poll, we did a poll. 66% of people think we will get a September slump. 34% of people think we will not. I don't know. I really don't know. After the big short, the bears, bulls are balanced. Not any signs of a bounce back. Yeah, I don't like long right here. It's the first day of September. And again, let's take a look at the September slump. All right, so here, let's take a look at it. Now, to be honest, it depends on which years you isolate here. There's a couple of this one. This one's by ETFtrends.com. Since 1928. I don't know which year it ended at. But again, if this one is accurate, September is by far the worst month of the market here. with an average of 1.2 down, negative. I think most people have September as the big losing month here, though. This one has an average of negative 1.2% down in the month of September. You know, we got some months, February, average of negative 1.1% negative. May, a break-even month. The rest are mostly positive. But September, very big negative month. And regardless of which data you get this from, look at the NASDAQ drop here. NASDAQ is breaking down right now. Let's watch this level here. 23,201 here. We might get a little bounce there. We might not. This is some heavy momentum too. See. But most people have September as a bad month. Right, this one is by The Economist. Again, you can kind of see it shows a very similar thing here. In terms of percentage. September known as the worst month for markets. This is why we have the saying, the September slump. Is because this is the type of stuff that can happen. This maybe looks news driven here. Look at this drop. Wow, hold on, let me see. General Mills reaffirms annual guidance. 2025 Barclays Global Consumer Staple Conference. Diamondback Energy announced it is to sell equity interest in Epic Crude Holdings for $500 million. Let me look this up though. There's got to be something going on. Hold on. MicroStrategy just bought 4,048 Bitcoin. August 26th to September 1st. MicroStrategy buys to get over 4,000 Bitcoin for aggregate purchase price of $449.3 million. I think this might just be fear. Yeah, look at gold. Gold started to push up. Wake me up when September ends? Yeah. Yeah, I think if we do get a green September, it's going to look something like we drop a lot, get a lot of shorts, and then the market starts to rally back. Maybe on good data, increased odds of rate cuts and optimism. Oh, excuse me. And then it kind of traps the shorts and starts to push up. That's possible. I'm not saying that's going to happen because I have no idea what's going to happen. But I think if we do get a green September, that's what it's going to look like. Because I've seen some Septembers that have behaved that way, where the first few days everybody freaks out, and then we start to rally, and the shorts get trapped, you know. So Best Buy and Uber are partnering for nationwide delivery of tech and electronics through Uber Eats. I think that's a great idea for Best Buy. Customers can now order Best Buy products via the Uber Eats platform. I think it's a great idea, to be honest. Still get same day delivery. Don't have to drive to the store. I don't even know what financial advice is, bro. I'm definitely not giving it out. This is the top 3 least financial advice channels in the world, bro. The timer for what? Wally? Yeah, maybe. Alright, guys. What are we going to get here today? Ooh. NASDAQ still breaking down, consolidating here. Again, the dollar index is up, gold is up. Nvidia is what's driving this. Look at the Nvidia drops. Nvidia is losing some steam here. We don't have any 8:30 data today, guys. We have 10 a.m. data, and we have 9:45 a.m. data. We got data at 10 a.m. ISM manufacturing PMI. That might move things. We'll see if it influences things. It's possible. All right, so FHFA Director Powell is speaking on Fox Business right now. Again, Michael Saylor buying more Bitcoin. Yields are higher this morning. So if you want to know kind of where markets are looking like, yields are higher this morning. If we take a look at them. Here's odds for rate cuts. They're up to Oh, they're down since I last looked at them. So, you know, yields are up. Rate cut odds are down this morning. Look at this. We're under 90%. We were 92% when I refreshed it this morning. Let's do it again. Yeah, so we're now under 90%. So the odds of rate cuts have decreased now. We're about 90-10. It was 98-2 a couple minutes ago. NASDAQ still flushing down here. Look at the yields. I'm sure yields are up now. Even more. Yields have been climbing all morning, basically. Look at this. Yeah, so Treasury yields are jumping on the prospect of the U.S. having to refund tariff money and the ruling there. Look at yields higher. Uncertainty, tariff court decision. Okay, so yeah, what happened? And I saw this earlier over the weekend. All right, wait. So Director Polt says the Fed Chair Powell is not holding the Fed Governor Cook accountable, that the president is looking to get the housing market booming. And again, a U.S. Federal Appeals Court, Federal Circuit, issued a 7-4 ruling that declared most of the tariffs imposed by the president under the International Emergency Economic Powers Act to be illegal, exceeding his constitutional authority. The tariffs affected major partners, including China, Mexico, and Canada, and the court stayed the decision, allowing the tariffs to remain in effect until October 14th, giving the government time to appeal this ruling, is what happened. Okay, wait. Dude, how do Christmas music show up here? Oh, hold on. Yeah, and so that's basically scared markets. People are worried about having to refund tariff money. It raises questions about scope of executive power. NASDAQ still flushing down with NVIDIA, and this is NVIDIA driven. That NVIDIA down to under 170 on 169s now. Is it time to buy it up? I don't know. I'm not necessarily interested in that right now. So yeah, basically the current administration is preparing to fight this in the Supreme Court. Treasury Secretary Bessent have signaled readiness to use other legal paths like the Smoot-Hawley Tariff Act if needed. It's fueled rate cut expectations. Tariff reduction could ease inflation and support corporate margins. And so originally, rate cut odds increased on this. Still causes some uncertainty. U.S. Treasury may have to face massive refund claims if duties collected on illegal tariffs are challenged. And again, the NASDAQ's breaking down on this. We have ISM manufacturing PMI today. NASDAQ cracking lows again here. We shorted this up here at 235. But we are flushing down here this morning. Looking very weak. The September slump is here potentially. Yeah, so what I heard the announcement was going to be at 2 p.m. and I might be wrong here. But I heard the president's going to change the name of the Department of Defense to the Department of War. And I think that's silly. That's ridiculous. Seems antagonistic. It's unnecessary. Just leave it alone. Like, you got bigger stuff to worry about here. And again, I'm not necessarily against him. I'm not for him. I hope he does well as the president of the country. You know. But I don't necessarily agree with this. I think this is just unnecessary. You're supposed to honestly probably pivot away from that. Make it less dramatic, you know? But again, maybe I'm wrong. Maybe that's not what they're doing. I thought that's what I heard though. GameStop? Yeah, I mean, World War II is a different situation, though. When we're at war, you know, that's one thing. But, all right, GameStop down to 2240s. Yeah, you don't want it to be provocative. But I mean, look, whatever. I don't think this is that big of a. I don't think you need to do a press conference for this. But hey, thank you, Rusty. I appreciate it, brother. Thank you, sir. Yeah, I did see Kraft Heinz are planning to split into 2 separate companies. I did see that news. Palantir was Palantir. Palantir all the way down to 151s right now. Look at PLTR dip. Nvidia breaking down, it's at 169.70s. Gold at 35.58s. Rate cut odds are mostly the same. You can take a look at yields this morning. Yields have been rising. Last week they were at about 4.2%. They're at almost 4.3% now. So they've been rising up. Here's Friday. Here's where they are now. So yields are increasing here. Yields are increasing probably because of uncertainty related to everything going on. We got data, but it's at 10 a.m. today. It's about an hour and 45 minutes away. Yields are up. Rate cut odds still about 90-10. They're still pretty elevated. About 90-10 rate cut odds right now. So. Yeah. Interesting. Y'all think we should cut rates, or do you think we should pause rates this month so far, chat? Let me know in chat. Cut or pause this month? What do you guys think? All right, so Powell is speaking right now. He says Fannie Mae and Freddie Mac are worth up to $700 billion for the United States. He said we are looking at what is available regarding the housing emergency, and they're looking at selling about 5% of Fannie and Freddie. The president's focused on getting the housing market booming. Yeah, I mean, that's why he wants to lower interest rates too, of course. You know. All right, so is it time to bounce, or we're going to keep dropping here in the NASDAQ? Again, this is mostly driven by Nvidia. You can see Apple, a lot of stuff down. Gold's starting to pull back though. Maybe the signal's a bounce. All right, looking at it, people. We asked people, do we want to see a pause or cut? Looks like most. Well, let me see. Cut, pause, cut, raise, pause, raise. Literally no reason to cut. Quarter point is the consensus. Cut rates, pause. I'm surprised with this split. Cut. Yeah, I mean, I think we should cut, personally. And again, maybe I'm wrong. And again, I'm not like basing it off of like politics or anything like that. What I'm basing it off of is the revisions that we've seen to the labor report. Outside of PPI, we haven't seen too many increased risks to inflation, although the PPI report was bad. But here's the problem, is that sometimes stagflation can precede a recession, and I don't want to go into a recession necessarily. I don't want inflation to spike either, and so I think modest start to a cutting, easing cycle makes sense at 25 basis points. I think we can do that, or we can end quantitative tightening if you really want to boost the real estate market. You can end the QT we're currently doing on it, which is the reduction of the Fed's balance sheet, and especially with MBSs, ending that can give a boost to the real estate market. Help bring interest rates down too, and so yeah, I think modest cuts is probably the path, but it depends. It's certainly not an easy choice right now, considering the high PPI inflation report we got. We're going to get another PPI inflation report next week. We're also supposed to get a yearly revision to the labor data next week as well. I think lately the market trades with Nvidia, though. All right, gold coming down. People buying Nvidia at 180 when they could have bought it for 41 cents over a decade ago. Yeah, I mean, let me get in a time machine and go back and buy Amazon in 2001, buy Apple in 1980s. Hindsight's 2020. Why red today? Fears of the labor report mostly is what I would say. Plus it's September. People are usually taking some trades on the downside in September to start it. 180 is 41 cents with inflation. Sarcastic comment, but funny nonetheless. First move's always wrong. This is a big move though. It's a big move. Gold's breaking down a little bit. It's at 35.50 right now. Time machine. I watched the movie Idiocracy with my kids yesterday or the day before. Is it like the time machine in that? At Costco? Where's Bitcoin at today? Bitcoin under 110 right now in Bitcoin futures. So a lot of markets are fearful for September. Yeah, gold's up, silver's up, I'm sure. The harder thing about silver is that, like, what is silver? It's like SC symbol. What's silver? SV? No. SLV? No. Is it SH? I love you. Good day. Yeah, I mean, you can see the start of Crocs in the movie Idiocracy. It's actually kind of funny because in the movie, this was like 20 years ago. In the movie, they wanted to get a pair of shoes or a shoe brand that looked absolutely ridiculous, that would show how dumb the people of the world were deep into the future. And they chose a relatively new company called Crocs at the time. And the movie is about how dumb people get in the future. And then now, in a huge show of irony, now one of the biggest brands for footwear is Crocs. And so people are actually wearing the shoes that were said to be dumb shoes in the movie Idiocracy now. And then it's like a big brand. Now, PMI data drops at 10 a.m. Yeah. PMI data drops at 10 a.m. ISM manufacturing PMI data 10 a.m. expected at 49 roughly. Is it correct to think that quantitative tightening can contribute to yields pushing up? I mean, it can, yes. Quantitative tightening is a hawkish, restrictive monetary policy, so it can make some yields go up, yes. It restricts things, keeps interest rates higher. Monster truck trails. Yeah. All right, gold bounced up a little bit. We have a double bottom here in the NQ. All right, guys. So let me explain something to you guys. We get some confusion about PMI data today. Manufacturing PMI, we get two releases of it. The first one I think is by Market Economics. It's not really a big report. It might move things a little bit, but it's not going to move things like ISM PMI data. Manufacturing PMI, or no, it's not Market Economics, it's a different one. But manufacturing PMI, regular manufacturing PMI, drops at 945. It's expected at 53.3. All right, but the ISM one I would say is probably the bigger one. It's the Institute of Supply Management. It drops at 10 a.m. It's expected at 49. We'll cover both of them. But I think the ISM one's a little bit larger. And it has more influence. NASDAQ still flushing lows. Let's watch 150 here. Yeah, I'm not gonna get too involved with political arguments on both sides, chat. You know. Does the market go up? I wish I was still holding that short. Did somebody ever answer me about what's SLV? Yeah. No, it's not SLV, it's silver. Y'all are gonna make me use Google. Y'all are supposed to be my Google right now. SI. Yeah, I mean silver slightly. I mean it's elevated relative to where it closed yesterday. All right, so German Chancellor Merz is hoping for exorbitant U.S. tariffs on Switzerland to be lowered, and the European Union must negotiate further. NASDAQ still flushing down here. No, our connection's pretty solid. We're good. I don't know what ISM is going to be. I really don't. Market's definitely red. What makes you think the connection is bad? We got 0 drop frames. So, should be pretty solid. Hey, buddy. Yo, man. Love you, dude. Good day, buddy. Alright, so the Russian press and Chinese president did not discuss the idea of deploying Chinese peacekeeping contingent in Ukraine. Merck also files for a 5-part note offering and 1-part FRN offering, according to the SEC. We're gonna bounce now. Look at gold turn. Gold's still turning down. Yeah, the president's supposed to speak at 2 p.m. I'm sure the VIX is elevated this morning, huh? Yeah, I'm up to almost 20. The 1850s. That's pretty high for the VIX. All right, so we got the World Trade. We got the WTO chief speaking. They said, we're experiencing the largest disruption to global trade rules in 80 years. Again, they said, we're experiencing the largest disruption to global trade rules in 80 years. If tariffs are used in a geopolitical and geostrategic manner, there's nothing we can do about it. Shares of global trade under WTO trade terms have fallen to 72% and could fall further. They said, world trade could feel the impact of tariffs, quote, later down the line, end quote, into 2026 as the trade uptick caused by front loading wears off. US WTO funding cancellation is concerning, actively working with USTR on the issue. And China is open to looking at industrial policies. I think there's a chance for success on reforms, and that the last 3 states ready to ratify fisheries subsidies deal, and it will take effect in the next few weeks. So that basically is going on over the last 5 minutes. Russia and the U.S. foreign minister is going to hold consultations as well. That news came out. Again, we also had news earlier that MicroStrategy buying another $550 million worth of Bitcoin, 4,000 plus Bitcoin. Again, yields are up. Recently, the market is making any news or economic report to be bearish. Yeah, I mean, I think people are worried about the labor report. We got big revisions to the labor report last time, and it was bad. It was weak for the economy, right? And so what we're seeing now is we're seeing fear coming into the market. It's September as well, though, so this is a mix of like Nvidia microchip weakness, fears for the labor report, and just broad sell-offs because it's the month of September, and a lot of the time, especially the first couple days of September, can be red, and so that's kind of what we're seeing. Ending the tariffs would probably send it sinking further, put trade deals in jeopardy. Yeah, I mean, that's what people are worried about as well. I doubt we're going to see a 20-year bear market, but it's possible. I mean, I don't want it to happen, but it's possible. Yeah, so really there's only been 3 times in the history of finance, for the most part, in terms of like big countries where we've had a 20-year bear market. First one was the original bear market of 1929. Peaked in 1929, fell 90% by 1932. Didn't really get back up there until 1950. 25 years to really fully recover purchasing power back to where we were, the original crash. We also, in the early 1970s and late 1960s, markets peaked in 1966, did not break above that level until 1982. So, 16 years. The last true bear market stretch, 1966 to 1982 stagflation era. Sideways in nominal terms, negative in real terms, you consider inflation. We also had Japan's Nikkei, peaked in December of 1989, around 39,000. It's spent over 30 years below that peak. Only in 2024 did they finally get over that multi-decade bear market, but they're rare, guys. They're rare. A lot of big money in markets right now. I don't know if they would allow that to happen, but it's possible. It's possible. All right, I might buy up a little bit right here just to play with it. We already got some green on the day. I'll buy it up around this level. Maybe add a little bit to 150. We're gonna keep it small though. It is September, so we've dropped a lot. We're gonna add into this 150 level. Don't copy me. Don't try to catch a falling knife, guys. Right, we took half off right there because we made green that quickly. That 150 level that we have on our charts held. We'll probably hold this break even now. See if we can rebound some more. I'm gonna jump out of it actually right there. We're up 30 ticks, 25 ticks. We might as well just take profit, I think. I'm trying to attack the levels I have on my charts, like this 150 level I like. And I think with how much bearish momentum we have, I mean, I don't know, gold is coming down a little bit, so. You can always find a bear if you look one. Yeah, I mean, most of the time bears are wrong. I'm not saying you can never short the market and find good opportunities to short, but the way you do it, I don't think is shorting the S&P and NASDAQ and Dow. I think the reason, like long term, the reason most of the time it's too risky to try to pick tops in markets is because the reason it's too risky is because a lot of the time, even if things look weak, we can have one like big bull runs, right? Especially at all-time highs. Half the time at all-time highs, we keep running. 60% of the time, it works every time. But half the time at all-time highs, we keep running. And so trying to short those tops and just get really, really risky. I'm not going to short the healthiest things in the world, like the healthiest companies in the world. And I think buying on pullbacks makes way more sense logically, but everybody wants to be the next big shorter. You know, they want to be the one that predicts the short. They watch the Big Short, they romanticize that type of thing, they idolize Michael Burry, and they want to be the next big crash predictor. And I get it. I love the Big Short movie. It's a great movie, but doing what they did is incredibly difficult and incredibly risky, you know, and most people are not going to be able to do it. It's why you always see all these other big influencers, right, in this space tell you the market's going to crash, right? And then the next week we move up and they're kind of quiet. The next week the next week we move up and they're kind of quiet, and then we drop 1 or 2% and they're like, "See, I told you the market's going to crash." It's like, yeah, well, we're still above where you originally called it. And so it's because they want to be like Michael Burry. They want to call that next big crash, and I get it. I like the Big Short, but it's super risky. Most of the time, it's wrong. You know, how many big influencers have you seen call big market crashes, encourage everybody to sell, and then the market runs up big? You know, I've seen a lot of them. Biggest statistical edge is on the long side, long term. Dollar cost average over a long period of time. Wait, easiest money in the market. But for some reason, like I think the younger traders are, the more likely they want to, the more often they want to gamble on the short side too, right? And it just causes people to just destroy accounts. Yeah, we don't have any 8:30 report today, guys. Like I told you, we don't have any 8:30 report. We have ISM manufacturing PMI at 10 o'clock. We're gonna cover. Yeah, I could have made more, but I'm not really looking. It's too risky right now to long the bottom here. I'm good. We bounced exactly where I thought we would at my level here at 150, but I'm up 36, 40 ticks, whatever it was. I can't remember. I'm going to take profit. I think that's reasonable. I could always look at it, and if it continues in the direction, say, oh, I should have held, but I'll be all right. Yeah, I've said it once. I'll say it again. It's so hard to make money calling market crashes that when somebody does, they make a movie about them. And so that should show you how rare it is. Yeah, Kelly, that's about right. What's your view on leverage? It can be very useful. It can also be very dangerous. Yeah, it can be useful. It can be dangerous, you know. All right, so we're finding a bottom here at 150. Volkswagen again announced about 10 minutes ago that they filed for a US denominated 2-year, 3-year, and 5-year notes. NASDAQ still breaking down, so it looks like me exiting my short position or my long position there was the right move. We got enough in the meat of the move there to be happy, I think. Also, guys, you want to help support the channel? I've only got one sponsor. Check out Top Step. They're a sponsor of mine, so of course I'm biased. Genuinely useful if you want to learn day trading. Most day traders are going to lose regardless of where you go. It's a lot cheaper to try this and lose than it is to fund your own account 5K and lose that, which is, you know, what happens to a lot of traders. Get you around the PDT rule. There's no PDT rule. Your risk for the base one is $50 a month. If you pass their test, you get a 50K funded account, 90% split, and they pay out millions, fund thousands. I'm day trading the NASDAQ 100 here, which is QQQ price action. Patterns are very similar to blue chip stock patterns. You can also trade commodities, gold, silver, a lot of other stuff too. Great way to learn. Great way to learn in a structured environment. It just makes sense. Zero commission on Top Step X as well. Just a beautiful way to learn markets. I'll put the link up if you want to help support the channel. And yeah, it's a big week for markets, guys. It's a big week. Is this a market crash? Of course not. Again, like, look, when in doubt, you gotta zoom out here. Okay. Here's the NASDAQ. Here's a yearly chart. This is what we're up in the last 12 months. This is this. Again, a market crash is gonna look like this. It's just a red September, which is what happens most of the time in September. The dump stops now. Market will open and act like it's recovering, but it will not reach Friday's close. Maybe. It crashes every day in chat. Yeah, it does. Yeah, what I see happen the most with like retail is they'll say, hey, the market's going to crash. And then the market drops 1% and they're like, see, you know, or they'll say the market's going to crash at 8:30. And then the market goes up at 8:30. This is what happened Friday. Market goes up at 8:30. And then later on it drops and they're like, see, so like I could say, hey, the market's going to go up. And then 3 years later, when the market goes up, be like, see, I told you guys. That's what I see. Another thing I see is like I see a lot of people make a bunch of predictions. They'll make like 10 different picks in stocks. They'll be like Amazon, Apple, whatever. And then one of them goes up. And then they forget about the other 9 and they just isolate the one that went up and they're like, see, I called this. You know, I see that a lot too. That's how it goes. It's retail traders, you know. We're now down to 125. I'm going to have to start drawing some new levels here. Maybe 125. Psychological level, I think. We got 1 right here. I got to kind of zoom out, though, and look at some longer term charts based off of this. We got some lows around these levels here. What is this? 1? Yeah. Here's a low. Here's a low. We're moving kind of fast here though, so I might want to reduce some of these levels. It's a little bit too much. 150 didn't respect at all. On a 15-minute chart. Oh, it's a 15-minute chart. Okay, that's better. I was about to say. All right, so these are the levels I'm looking at. It doesn't mean it's going to stop at these. These are just the areas I'm watching. September is when hedge funds, family offices, institutional players return to their desks. They'll be looking to offload underperformers. Yeah. I think Michael Burry's a genius, right? I really do. I think he's smart. I think the problem with Burry, and I've said this a couple times before. It might have been a while ago the last time I said this. The problem with Burry, and I can't really knock him for this either. The problem with Michael Burry is that Michael Burry proved a lot of his family and friends wrong. And some of his friends literally sued him even though he made them billions of dollars shorting the market in 2007, 2008. And so he had everybody make fun of him. Everybody call him, you know, all these names. Some of his friends literally sue him. And then it turned out he was right the whole time. Right? The problem is that since 2007, Michael Burry has called about 25 of the last 2 market crashes. And so he's wildly over predicting crashes at this point. And I can't even get mad at him because it's simple. He doesn't trust the system anymore. And so, you know, when you got everybody betting against you and then you prove yourself right and you prove them wrong, I think it changes how he looks at things a little bit too much. And now he over predicts crashes. He thinks we're always going to crash. And at least the last few times, he still does well. But publicly, I think he predicts too many crashes now. He needs to chill out. But we'll see. I still think he's a very smart dude. I'm not ever trying to, you know, he's definitely got a bigger net worth than I do. I'll put it that way. Yeah, VIX is moving up as the market moves down. That's pretty standard. Again, I think one of the riskier things that we're going to see, not just for this next labor report, is we're supposed to get a big revision. Hold on, let me figure out what this is going to be. I think it's September 9th we get this revision. Okay, so we got the annual benchmark revision to employment data. Early September. This year is going to be Tuesday, September 9th at 10 a.m. And this is after we got PPI inflation data. I think, hold on, wait. Let me make sure. Okay, no. So, yeah. So next week we got CPI and PPI data. Prior to that data coming out, we get what's called The preliminary benchmark revision to non-farm payrolls comes out at 10 a.m. Every year, the BLS revises payrolls to align the monthly survey with more complete QCEW data covering 95% of U.S. jobs from unemployment insurance records. September's release gives the prelim estimate. The final revision then comes February of 2026. Big yearly revision date is Tuesday, September 9th at 10 a.m. The next day, we get PPI inflation data, the first PPI report since the bad one last time. And then the day after that, we get CPI next week. It will update job counts back to March 25 and can shift the labor market narrative big. And that's after Friday, we got the monthly labor report that we get this Friday, coming out on the 5th of this month. We got a lot of labor report stuff coming out over the next week and a half. We'll see. Yeah, honestly, The Big Short is what got me involved with finance. It really is. I went and saw the movie The Big Short, and I loved poker prior to this, and I love strategy games like chess and checkers and all that stuff. But I went and saw the movie The Big Short, and I realized that you could do a similar thing, but on a bigger scale. And immediately got home after watching that movie. I saw it in theaters when it came out. Had no idea what it was about, really, when I went and saw it. And then immediately started learning about finance and trading and markets, With that said, though, I still think Burry over predicts crashes. And I think he influences traders too much in that way as well. Do you think the market will react positive or negative to cuts in a couple weeks? Good or bad reaction to cuts? Heading down until CPI next week? Maybe. I think people fear the labor report. It's also September, guys. Like, September averages about 1% down in September. So, it's September, Again, and we do have ISM manufacturing PMI data coming out at 10 o'clock in about an hour and 10 minutes. So we got time. ISM manufacturing PMI drops. It could move markets. I think services PMI is a little bit more influential recently. But with tariffs and everything, manufacturing could be important too. We got services data on Thursday this week, along with prelim payrolls at 75K is what they're expecting. They're expecting decreases in the labor market too. Lockheed Martin. Buy the rumor, sell the news. And I think we're getting baked into a potential labor report outcome right now. It's also September. NVIDIA is breaking down too. NVIDIA down to 169.50s here. Gold broke all-time highs yesterday. Also, give me a follow on x.com @beginnertrades. We post a lot of fun stuff. Again, at Beginner Trades. Give me a follow. TRADES. Beginner Trades. TRADES. Do it now. Silver down a little bit on the day. Is it time to buy this? I don't know. Nvidia down a little bit, starting to rebound back up. You can see the NASDAQ popping back up as well. Let's watch 150, see if we reject or break over that. Kind of a psychological level here. Yeah, I mean, going with your gut can sometimes make sense. Other times it can be risky. I'm a little concerned something might come out and bite all these bears before the open. Just gonna sit on my hands with my profit. Hey, appreciate the $10. Yeah. I don't know, man. I think it's possible. We still got 35 minutes or so into the opening bell. I think it's possible we rebound back up until then and then continue the drops at the open. But you never know. We could just get bought up and run at the opening bell too. Either of these outcomes. You got a 50-50 shot here. Appreciate the follows. We do this live for free. Most of the time we're covering economic data. So we get thousands of people here when we cover economic data, especially 8:30 data. Gold's starting to come back up higher here, though. Let's see if it holds. Today's the only day this week where we don't have that much. We got ISM manufacturing PMI today. Tomorrow we have JOLTS. Thursday we have prelim payrolls, jobless claims, unemployment, and more. A lot of stuff. So... President now is speaking about Chicago online. I'm not really going to get into it too much. It's too political, but... We haven't had any losing trades, I think, today, which is good. We've had a couple green ones. All right, look at the NASDAQ fall here. This is news related, almost certainly, with the big drop coming in. All right, let's see what this is. Something's going on. Look at that drop. 5 minutes before 8 a.m. too. Not really a time we normally get releases here. Let's wait to see what happens. Very strange drop. All right, so the U.S. pulls Taiwan Semiconductors waiver for China shipments of chip supplies is probably what's dropping this. Okay, so the news that I just saw is that the U.S. is pulling Taiwan Semiconductors waiver for China shipments of supplies. This is the news that I'm showing right now. I think that's negatively impacting Nvidia and other microchips, as well as the NASDAQ, which is full of tech. Pretty sure that's what's going on. Yeah. We look at TSMC. Here. What is it? TSM. Yeah, this is TSM dragging it down. Look at this. Look at the big drop. Big reaction we got. Chips are down, gold is up, TSM is down, Nvidia is down, reacting slightly negative to this. Anything cheap that looks worth a buy right now in stocks? So again, US has reportedly pulled Taiwan Semiconductors TSM 2330 TT for China shipments of chip supplies, according to Bloomberg. Good fact checking, John. That's why you're at the top 3. Definitely top 3 ever. But yeah, no. When I see a big drop like that, it's almost always catalyst driven. You know, it depends on what time it happens. Like sometimes at 8 a.m. or 9 a.m. we can get some big reactions from like markets opening up. But this wasn't at any of those. This was just kind of random time, which usually means like a big candle like this is catalyst driven. And yeah, you can see TSM here reacting negatively to this catalyst that just came out. So that's what happened. If we get any other movement here, but that's the news that just showed up. Again, TSM. Yeah, Bitcoin's down today. Gold up. Nvidia actually reacting somewhat positively to this, and you can see TSM getting bought up here. Buy the rumor, sell the news, maybe. Yeah, here's Bitcoin. Bitcoin at 109,475s. All right, so we're about to get the 9 a.m. scrum if we get one here. Let's see if anything happens. All right, so Nestle ousted its CEO over an undisclosed affair. The current administration is considering declaring a national housing emergency, and Starbucks is buoyed by the return of the pumpkin spice latte. From the big news today. I'm not a big fan of the pumpkin spice. It's good, but I don't necessarily think it's good for you. And so I'm not drinking that. All right, Nvidia up there at 170s. Bitcoin's not down too much today. I mean, it's down. It's green relative to, let me see, actually. Where's Friday's close? It's green relative to where it was at midnight last night, I think. Maybe not, though. Hold on. Nah, never mind. Where in the world is it using this previous closing price from? I guess from where it closed 5 p.m. yesterday for Bitcoin futures. Not really the accurate previous closing price for futures, I think, but... Yeah, I mean, TSM was down. It started to bounce back, though, but, you know... It's still net negative from it, but it did retrace a lot of this downward push for TSM on the news. Again, U.S. reportedly pulled TSMC's 2330 TT for China shipments of chip supplies, according to Bloomberg. Intel CEO resigns? I didn't hear that. Let me see. Yeah, I don't see anything about Intel. Intel's down on the day. It's at 2375. But most microchip stocks are. MU's going to be down. AMD's going to be down. ESM's definitely down. Tech is down. Amazon's down. Netflix is down. Meta's down. Microsoft down. So all Mag 7 stocks are basically down today. Philip Morris announces fiscal year adjusted EPS guidance of 724 to 737 versus 750, so a little bit lower guidance for PM. actually up a little bit in pre-market though. Yeah, Pepsi announced a deal this morning from another company. Is the news for Pepsi. It dropped early this morning. But Pepsi did announce some stuff. Let me find it. I saw the Pepsi news early this morning. Oh, I know where I saw it. Hold on. Pepsi was Pepsi says Elliott has roughly a $4 billion stake in Pepsi Company. According to the Wall Street Journal, Elliott is going to push for changes to boost the share price. His stake in their stake in Pepsi is one of Elliott's largest equity positions ever, according to the Wall Street Journal. All right, we asked people, will we get a September slump? 68% of people in the poll said yes, we will. Gold at all-time highs. I'm waiting for the opening bell. We've had a lot of red. I don't know what we're going to get leading into the bell, but if we're going to get a continuation of the red, it might be at the open when volatility opens up. But maybe not. We could fill some of this gap on the upside. It's heavy today, though. I've only taken shorts. I've had a couple green trades, but seasonality is important for sure, you know. But it's all probabilities. Like it's all probabilities. It's not absolute. Like September's usually red, but it doesn't mean it's always red. Sometimes we're green in September. The holiday season is usually more volatile and influential, but sometimes we get big stuff happen in the summer, you know. And so seasonality is important to weigh, but it's not absolute either, you know, is the way I look at it. So do we have better odds for certain things during different seasons? Sure, but it's not always like that. Yeah, we've broken down and now we're kind of chopping sideways over the last 10 minutes here. We got 25 minutes until the market opens. Yeah, that's a good quote. Only a Sith deals in absolutes. Star Wars. Yeah, I like it. I'll tell you once, I'll say it again. My favorite quote is, "The truth is like poetry, and most people effing hate poetry." I think some guy heard it in a bar, but I like it. It's a good quote. At the beginning of The Big Short, the movie. I also like, money is not made in trading, money is made in waiting. And I think it's a very good quote to explain markets. You gotta wait for the right thing. Yeah, I heard yeah. I was up in Michigan a couple months ago. It was hot in Michigan a few months ago, but I think it's turned down. It's like 40-something degrees. Winter's about to start. So. Bitcoin is what? Still down pretty big on the day, but it's starting to bounce up a little bit. Let's see if it holds. Here's Bitcoin. It'll be an interesting time. Bitcoin and crypto people want easing. You know, they want QE, really, which I hope we don't do. But their theory is that QE is going to make Bitcoin rise. I don't know. I'm not necessarily a big pusher for QE right now. It's just gonna make things worse, inflation-wise. I'd rather do more balanced things. Or it's for altcoins. I'm sorry, not Bitcoin. Right? Yeah, I don't know. All right, Nasdaq's holding at that 75 level, trying to get back up. Let's watch 125. Nvidia's rising back up too, about to hit 170s if it continues. Big Macs are already $8. I can't justify that. I'll buy 2 double cheeseburgers. What are they, like $4 now? Last time I went to McDonald's, I feel like they were like $2.50. So a judge ruled that the president's LA troop deployment violated federal law. A U.S. judge grants injunctive relief in Newsom versus the president court filing. Seeing that news come out. Apple posted a few minutes ago that said their iPhone 17 Air may mark Apple's new strategy. Apple will unveil its iPhone 17 September 9th, which is also when the labor report revisions come out, including a new ultra-thin iPhone 17 Air, which Evercore calls its biggest design change in years. The Air is 35% slimmer than the iPhone 16. All models get 120 hertz displays, camera upgrades, and new A19 chips. They say the launch kicks off a roadmap that could bring a foldable by 2026 and a curved glass edition in 2027. I had a folding phone for years. It's cool, and it's surprisingly durable. The only problem is that it's heavy, and I know the new thin ones are probably a little bit better, but it's heavy, you know? Yeah, I'm not a big believer in QE. I mean, I'm a believer in QE, but I don't think we should do it right now. The new Z phone might be. The old one won. But the new one might be. I haven't been to Jack in the Box. It's gotta be. The thing I like about the tacos at Jack in the Box, I know they're bad for you. 50-cent tacos, I mean, I buy like 15 of them, you know? And they're good. I like them. I can't hate on the tacos from Jack in the Box. But, yeah, I mean, generally, just for everybody that doesn't understand what we mean by quantitative easing, QE. QE is money printing. It's basically the Federal Reserve creates online money and then uses that to buy up a bunch of bonds and a bunch of MBSs, and this injects liquidity into those markets and ultimately can help bring interest rates down. They usually only do it. The problem is that it risks inflation in a much more profound way, and so they only do it in like dire, desperate situations. Like we did this in 2008, we did this in 2020, when things were in shambles, right? Because there's risks to doing it. You know, they can lower the federal funds rate, or they can do a more desperate thing called quantitative easing. They can also do what they're doing now, which is the opposite of QE if things pivot to the other direction, which is called quantitative tightening. It's not direct selling. It's not direct QT, which is like directly selling off bonds. It's more so just letting their current holdings like mature and expire basically off their balance sheet instead of directly selling them in open markets. Yeah. But we're still doing QT, but they reduced it by 80%, at least they did for treasuries. They're still doing it with MBSs, though. And so if you want the mortgage market to get stimulated. Ending QT can do that as well. Yeah. Yeah, I've had one of those, Ace. Yeah, given the current data, there's no need. We're too ambiguous right now in terms of what we should do. I don't think we should do QE. Bitcoin fighting back up, almost back up to 110s or 111s. Let's make a little rebound this morning. Or 110s. Yeah, 110s. Sorry, I'm just now realizing I'm in top chat. Yeah, I never use the pin. If I got fingers, I'm not going to use the pin. You know? Yeah, we're starting to fight back up. Let's watch 125. It's September is the news that made markets tank. September mixed with the tariff recall, potentially mixed with there's a couple things. Labor report coming soon this week. A lot of it's just scaring markets. All of a sudden it just tanked at a specific time. Yeah, I mean, there's a couple things that happened this morning. It's September 1st. It's the first trading day of September. You know, it's probably what it is, but Labor Day break, rising caution, labor report later this week. I just realized the labor report's dropping on Labor Day week. Again, debates over the president's attempt to remove Governor Cook and nominate Stephen Moran. Legal scrutiny. Federal court appeals invalidated several of the president's tariff policies. They're still enforced during the appeals. It kind of clouds what might happen in the future. Mounting competition in China for AI chips. Drag markets this morning. A lot of stuff causing fear. Yeah, September slump scares a lot of people. We got less than 15 minutes though, chat. Let's see what we get. Nasdaq's bouncing back. So is yeah, Nvidia is driving this pullback here too. Nvidia down under 170 still. Gold broke all-time highs. I mean, I'm listening to this holiday music. It's getting me kind of pumped up. But it's September, unfortunately. And the markets are down. I'm more scared of the September slump turning into a 6-month red trend. It's possible. Yeah, we also had the TSM news this morning that came out not that long ago. TSM news was that the U.S. had reportedly pulled TSM's 2330 chips for China shipments of chip supplies, according to Bloomberg. The TSM was the one that originally reacted negatively. Look at this 125 level reject too. "13 minutes, chat." Alright. Bitcoin bouncing back. Do we get a rebound at the opening? I'm going to end this poll. We got about 1,400 votes. Let's do another one. Do we get a rebound at the opening bell? Or does the market red? Does the red market continue? We got manufacturing PMI. There's the new poll. Vote on the poll. Let me know what you guys think. Rebound today for false hope. The candle today was just each stops, and tomorrow will crash your dreams of all hope. Maybe. We got the JOLTS report tomorrow. That's usually kind of big. We'll see what that looks like. We got 10 minutes left until the opening bell. Did anybody watch the Craig Jones Invitational? I didn't like it, honestly. Boring. The quintet style made it boring. Less big names. Friday's NFPs need to be below expected, but not under 50K. Yeah, I mean, I think we're in a bad as bad and good as bad scenario too. I think if the payrolls are too strong, it's going to push back odds of rate cuts and people are going to panic. And I think if they're too weak, people are going to panic about recession fears, is what I think. All right, we're at 116 still. We tried to break over 125. We couldn't do it. 8 minutes left. All right, here's 125. Bitcoin's still popping up. See if Nvidia gets some legs on at the opening bell. I mean, the obvious direction is short, but sometimes we fill gaps. Quiet market leading into it, though. Where's TSM? Did TSM ever pull back? So TSM has filled the whole drop. Not all of it. I would say about 90% of the drop TSM has filled. All right, so we got a donation. He said, I know Powell is protecting the long end of the curve. What is the president's goal with trying to tank markets? Where do you think he's trying to tank markets? Job numbers going to sink us. Powell's going to have to start. I appreciate the donation. Where do you think he's trying to tank markets? Like, give me an example of something he said where he's trying to tank markets. I'm not saying he didn't. I'm curious. To answer that question, I need to know what he's saying that's trying to tank markets. I mean, he's doing some things I agree with, and, you know, certainly doing some things I disagree with, but he wants lower interest rates. I mean, sure, he wants a thriving labor market and GDP data for his presidency. That's pretty much every president in history, though, unless inflation's like an exorbitant, you know, at crazy levels. And so, I mean, I can't really knock him for. I can't really get mad that he wants to lower rates, right? But the risk of lowering rates is inflation, and so, you know, it depends on how much he's pushing for that. He wants to stimulate the mortgage market, which I think a lot of people would probably agree with, you know? Like, a lot of people are for helping the mortgage markets and the real estate market in that context, but not necessarily being as aggressive with, you know. And so it's tricky, it's nuanced, but I don't know if he's trying to tank markets necessarily. I think he just wants a thriving labor market and low interest rate environment right now to stimulate it, to be like, see, you know, look what I did. And again, I can't really get mad at him for it, because that's basically every president, you know. Alright, we're trying to get over that 125 level. Opening bell's in less than 5 minutes, in about 4 minutes, actually. But I appreciate the donation. Thanks so much. And again, I'll say it once, I'll say it again. I'm not very partisan. Like, I'm not really going to root or, like, hate on either side. I'm just going by what I think is actually going on. Which can change and vary, you know. He wants lower rates and issues on the short end of the curve. That screws long end and insinuates higher inflation. Well, yeah, I mean, yeah, that's true. But I mean, the reason he wants that is because he's currently president, and he wants to say, look at the GDP, look at the labor, look at how strong jobs are right now. Look what I did. Basically what he wants. And so he also doesn't want us to enter a recession under his watch as well, right? And if we wait too long to cut interest rates, which I'm not even necessarily saying we are at that super pivotal moment right now, but if we wait too long to cut interest rates, the consequence is, you know, sometimes recessions or worse. And so, you know, there's an argument for lower rates. There's also an argument against it. Inflation's risky. You know, the more stimulative we are in terms of rates, the bigger risk to inflation, and so it's a balancing act. You know, the Fed's dual mandate is low inflation and thriving labor market. So you know, I think right now, again, I'll say it again, I think it's kind of ambiguous right now. The market opens up in about 2.5 minutes, about 2 minutes, really. A little bit too much. Yeah, I mean, the labor report's looking rough as well. Labor report's looking rough. And so we might be seeing signs of a weakening labor market. And if that's the case, we might want to cut rates, you know. All right, markets, look at the market fall right now ahead of the opening bell. This might be the market on open. This drop. Today we have manufacturing PMI data. We have two different reports. We got one at 9:45 and the ISM one at 10. Yeah, I mean, we're seeing signs of weakening labor. And I think even Jerome Powell in the Jackson Hole Symposium admitted to that a couple weeks ago. And so we are seeing weakening labor market signs. Don't get it twisted. We are certainly seeing weakening labor market signs, considering the revisions. And that's why this week is so pivotal, is because we're also seeing signs of high inflation and PPI inflation data. So all eyes are going to be on the labor report this week, and then next week on PPI, as well as the other benchmark revision next week as well. So like, we got a lot of stuff happening. All right, there's the bell. There's the bell. Hit the live button next to the play button. Make sure you're fully caught up. We're starting to see some red at the open. We'll see what brings us down here up. But red action in the opening bell. Looks like we're going to crack lows, but maybe not. We're close enough to it. There's the bell. Remember, hit the live button next to the play button. Put it in 2x speed. We just cracked lows. Still breaking down. Very weak day for September. The September slump might be here. Again, NVIDIA breaking down at 169s. Big retracement. I'm not going to trade the first 5 minutes. I'm going to let the first 5 minutes play out. TSM still bouncing back, though. NVIDIA still testing low of the day, though, at 168.50s. Tech is weak today for sure. All right, we're starting to flush. Again, I got to wait 5 minutes. 4 minutes now. United Health's still up big, though. NASDAQ down to 23s. 23 might be a big level here, though. 23,000. Psychological level right here. 23K. So let's see if we test it and what happens then. It's too close to the opening bell for me to really mess with this, but 23,000 is a very, 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 very large psychological level. Big hold number like that is going to influence things. You guys traded since the opening bell yet? Let me know. Again, let me know in chat, bull or bear. Bull or bear. NVIDIA's starting to rebound back up. We're right at 23,000 right now. Down it goes. Yeah. Kind of flat, though. I think the market might be fearful today. Bull? Yeah, maybe. Bull. UNH just completely retraced all the way back up. Apple's down. Apple's breaking down right now too at the open. Apple down to 228. Amazon's down, but it retraced some. All right, look at NVIDIA though. NVIDIA going red to green at the opening bell at 170. Psychological level here. All right, we're 3 minutes into the day. 3 minutes. All right, rejected at 75. NVIDIA's starting to come back down. All right, so we're starting to rebound back up. Let's watch 23 ones. Yeah, we got manufacturing PMI data at 9:45 here. I'll put a timer up for this next one. We got ISM one at 10, but this is about 10 minutes. There's a timer. All right, there's 125 right here. Tapping it right now. Let's see if we hold. If we pull back to 23 ones, I will take a position now. But we need a larger pullback here. If we get it, but this looks strong, honestly. Bitcoin fighting its way back up. It's at 110.50. Watch 150 up here now. Yeah, I need a pullback to buy into this. It's too strong right now. Apple's starting to dip too, though. Taiwan Semiconductors is green from the news. All right, so TSMC says it has received notification from the U.S. that authorization for will be revoked effective December 31st. All right, let's move up here. Let's see what happens. 150 seems like a level, though. I will try to short this, but it's risky. If we can tap it, we might not tap it. No. There's 125. A little bit unknown, I think, with regards to like Apple's rebounding back up. So is Amazon and others. We just tapped 150. I was looking somewhere else. Nvidia's looking too strong though. It might not work. I need a larger pullback to get this, and it's just too small. Although the momentum's definitely on the upside right now. It could change. What are those blue levels? They're my own self-drawn support and resistance areas. Still trying to get over 150, which again, like I said, I think is a big level here. We've had 1, 2, 3 green candles in a row, but they're large green candles. 200 exponentials at 183. That might be another area I'm looking at. Nvidia's back up though, climbing back higher here. All right, so remember, guys, we got regular manufacturing PMI dropping at 9:45 today. That's in 5 minutes, 6 minutes, 5.5. I would like a pullback to like, I don't know about 125. I think I'd rather 100. But if we get 125, I might attack it on small size to buy. If we get up to the 200 exponential at 182s, I might short it. And some red showing up now. I'll try to buy it. Oh, I missed it. It sucks. I'll have to add into this now. I only got one, so it's pretty small. Like I said, I'm going to add into this down here. Take 4. Start the day. We can pop up a little bit here. There we go. Took half off up there. Another piece off right there, and I'm gonna sit on the rest. There we go. All right, I'm out. Very quick bounce. Caught it right at 125. Yeah, I'll take it. I mean, we got 4 minutes left until manufacturing PMI, and so I think that's fine. I was just trying to attack this small little range and a scalp here around my levels. Been playing my levels a lot more, so I'm looking for this. No losing trades yet today. That's good. I don't think I've had any losing trades. Let me see. Gotta be a way to show my trades more. Yeah. I've had a couple of losing fills, but most of them has been green. Like most of the net trades have been green. All right, Nvidia's still popping up. Let's see what happens. All right, so we're starting to bounce back. We're at 170s. Again, the other short area I was looking at was 180, but don't copy me, not an investment professional. Understand all this stuff on the screen. I can't guarantee anything. I'm not an investment professional. Also, check out Top Step. Great way to learn how to day trade. Most day traders lose money. And so if you fund your own account in the beginning especially, you're probably going to lose it. Instead, try Top Step. $50 a month, you get started, you pass the test, you get a 50K funded account, 90% split. Most day traders lose. So it's a great way to limit your risk. Your risk is $50. If you pass it, you get a 90% split anyway, which is similar to funding your own account. A lot of great stuff coming out for them. I'll put the link up if you want to help support the channel. They are a sponsor of mine. I am biased because I get paid by them. Genuinely useful for traders in my subjective opinion, but genuinely useful. If you want to check it out, link is pinned to the top of the chat. You can also find the link right here. Great way to help support this free content. Everything we do here is free. I don't sell a course. Don't sell a service myself. Don't claim to be even a good trader. And if you appreciate free data every day. Oh, I saw it, Pawn. I got you, bro. If that's you texting me. I don't even have Discord up. My bad, dude. Oh, never mind. All right. Yeah, I mean, look, I was thinking about shorting right here. Remember. Maybe I should have taken it. Distracted over here. But we got 2 minutes left, so it's a little bit risky. Less than 2 minutes, actually. All right, hit the live button next to the play button. Put it in 2x speed. You'll catch up to the stream. We got a minute and 10, 20 seconds left. NVIDIA's bouncing back, though. It's at 171. This is what's driving this rebound. Amazon falling back down a little bit, though, right now. ISM still holding, surprisingly, even though bad news came out for them. All right, here we go. 30 seconds, chat. 30 seconds. Again, manufacturing PMI expected at 53.3. The big one is ISM data at 10 o'clock. That's the big one. All right, so ISM manufacturing PMI, the larger report here. But this one might move things. Let's see. We got 20 seconds left. Hit the subscribe button. Hit the notification bell. I appreciate it. This timer's a little bit early. We still got about 12 seconds left. And here's the report coming out in about 4 seconds. 3, 2, 1, and here's the report. Manufacturing PMI showed up at 53 versus 53.3. 53 versus 53.3 expected. A little bit weaker than expected, but again, I don't expect this one to move markets too much here. Just because the big one's the ISM data. So this one is kind of like, nobody really cares about this one for some reason. ISM, Institute of Supply Management. This is the global composite PMI. I'll put it up on screen. Slight positive reaction here. Again, I'll put this data up on screen. The big one drops again. Big one drops at 10. Still seeing NVIDIA pop. If we hold here, there's the 200 exponential. So we rejected there a little bit. Now we're starting to head back up. Let's watch 23.2 above us, if that influences things. But again, this is very strong. Yeah, looking at Bitcoin. 111's now for Bitcoin. Almost back up to 112, so buys coming in. Again, shorts getting squeezed out. All right, we got another dip at the 200 exponential here. See if 150 bounces it. Nope. Oh, it's this high right here. 40. The larger one comes out in about 11 minutes. ISM manufacturing PMI is expected at 53. Or no, it's expected at 49. So the way the Purchasing Managers Index works, which is what PMI is abbreviated into is Purchasing Managers Index. The way it works is below 50 indicates a contraction in that sector, right? So if it's 49, that means a slight contraction. If it's 40, it's a big contraction, right? If it's above 50, it means expansion in that sector. So if it's services, expansion in services. If it's manufacturing, like today's, that's an expansion in manufacturing. Look at this push. Oh, coming in. Watch 23.2s. Nvidia's still up to almost 172s. Yeah, this is Bitcoin futures. All right, so we rejected at 23.2s, at least a little bit here. Let's see if the 200 exponential right here holds it up. Yeah, I'll put this timer up for the actual big report. About 10 minutes. Remember, tomorrow's is the JOLTS report. So. All right, so NASDAQ did end up bouncing right around that 200 exponential and still pushing up over 23.2s. 235 is a historical level, but again, this is Nvidia strength rising here, squeezing out all the shorts from earlier. We'll see what we get. All right, we're over 235s, or we're trying. We might reject here. Again, look at Apple. Apple's back over 230s. Nvidia's pushed up all the way to 172s right now. Amazon's slightly green since the opening bell as well here. So we're down a little bit here. We have 7 minutes left. We're still red on the day, but it's not as much, and the market has rebounded all the way back up. No climbing, no stopping the bulls this morning. I mean, we made some good trades. We're up. We haven't had any real losing trades. But I can't help but not want to long this right now, guys. So I'm trying not to long it. Again, ISM date in about 6 minutes. All right, guys, here we go. 5 minutes left. Is the NASDAQ going to stop at 235? So let's see. Today is False Hope Day. Tomorrow is Smashed Dreams Day. Is that true? Do you guys agree with this? Our poll is 50-50 split down the middle and rebound continuation out of almost 500 votes, which is interesting. I don't know how much this is going to affect markets. Sometimes ISM PMI, I would say services is a little bit larger reaction. But this is something. Again, I would say services is a little bit larger of a influence over markets versus this. All right, we're up to almost 273s. We haven't really stopped. Bitcoin's pushed up, gold's correcting, Apple's up. Again, Amazon's rebounding. Nvidia's green since the opening bell. Again, a lot of stuff's still pretty red on the day, though. Nvidia's still red. Apple's still red. Amazon's still red. So everything's still pretty much red on the day still. But we have filled some of this gap down. The question is, do we go higher? And is ISM PMI data going to influence this enough to change course here? I'd love to know where this buying pressure materialized from. I mean, I think it's kind of obvious, no? I think it's probably because we were down so much to start the day that bulls started stepping in. Maybe shorts got squeezed out a little bit at the opening bell. It doesn't mean we're not going to continue down. But I think a lot of the time we move big one direction in pre-market. A lot of the time we're not going to continue in that direction. Sometimes we're going to fill part of the gap, all the gap, half the gap. And that's just kind of how markets behave most of the time, you know. Not always. I think you're just a huge optimist. I mean, I'm not even saying markets are going to continue up. What I'm saying is that a very common, like anybody that's looked at charts long enough, that's not super biased in one direction, to be honest, is going to recognize that gaps fill some of the time, right? Squeezes happen. Pretty standard stuff, man. You know, I don't know, chat. Let me know if you agree with me, but this happens a lot on both sides, on the downside, on the upside. We're not just going to continue in one direction all day, every day. That's much more rare. Much more rare. It happens like Friday, but it's much more rare. Most of the time that doesn't happen. Most of the time we move down a little bit, where we move down a lot, up a little bit, down a lot, up a little bit, up a lot, down a little bit. Like, you know, that's how it goes. All right, guys, we got 2 minutes left. 2 minutes left. A gap doesn't always necessarily refer to... I'm assuming that you're talking specifically about like a move up that happens in pre-market that has no price action in between, like a catalyst-driven gap. Gaps can also in trading refer to just movements up and down relative to different markets, right? So like, or different time frames or different periods of markets, like pre-market versus the opening bell. There might be a gap in between where we're at in pre-market, where we started pre-market, and where we open, right? Like, gap is more widely used than that. All right, guys. Hey, we got a minute and a half. A minute and a half. All right, we got 1 minute. Sure you do. No, that's all good. I'm just joking. All right, Nvidia at 171. All right, let's see what we get. I don't even know how much this is going to move markets. Again, it's expected today at ISM PMI expected at 49. ISM prices expected at 65.1. 49 though for ISM manufacturing PMI. Let's see if we get it, guys. Let's see if we get it. We got about 25 seconds left, about 30 seconds. All right, so this timer's a little bit early. We got a little bit more time left. All right, so previously ISM PMI showed up at 48. All right, here's the report right now. ISM manufacturing PMI showed up at 48.7 versus 49 expected. 48.7 versus 49 expected. Again, 48.7 lower than expected, but mostly flat. Manufacturing prices showed 63.7 versus 65 expected. So it shows a little bit weaker everywhere, but not enough to scare people, I think. A little bit weaker everywhere. A little bit weaker everywhere, but not enough to scare people, I think. Again, 48.7 versus expected 49, previous of 48. Manufacturing prices showed 63.7 versus expected 65. NASDAQ has reacted positively to this. But again, we didn't really move that much from this report either. Like, the NASDAQ did react to it. You can kind of see here. Tomorrow's JOLTS report is probably going to be larger than this. Let's see if we test 273s, 275s. It'd be great for DJ to come out and say, yeah, it was a joke. I resign. All tariffs canceled. YOLO. You mean Demetrius Johnson, Mighty Mouse? I'm just joking. I know who you mean. You mean the president. All right, we're at 235s. Let's see if we pull back to this level and hold. Again, the data, I'll put it up in chat right now. All the data here. 48.7 versus 49 expected. Here's the big one that showed up. A little bit weaker. It's in chat right now. I'll put it up on screen too if you want to see it. But that's basically it right here. The bottom. I'd vote for Mighty Mouse. You know? All right, let's see if we hold. All right, look, guys. Again, I'm going to get out of here. I'll be back tomorrow. Tomorrow we got JOLTS. We got the JOLTS report tomorrow. Big report. Big day. Not only do we have JOLTS tomorrow, but we got factory orders, beige book. We got some Fed members speaking, and then Thursday's the busy day. Thursday we got a whole bunch of stuff going on. Nasdaq's fallen down. Maybe the first move is the wrong move on this ISM data. It was weaker than expected. It showed weaker than expected manufacturing data and prices. So, I mean, a little bit of mixed numbers, but we'll see what happens now. Let's see if this 235 level rejects us now. Yeah, again, if you want to check out Top Step, great way to help support the channel. No PDT and futures. Great way to learn how to day trade. Very similar to day trading stocks. Get you around the PDT where you get started for $50 a month. It's not the end of the world if you lose that versus funding your own account thousands and losing that, which is a much more risky thing. So it's the best of both worlds. 90% split if you can pass the test once you're funded. No PDT rule. Very similar to funding your own account in terms of split. Risk is noticeably less. It's the best of both worlds. Zero commission on Top Step X. They're doing a lot of great stuff. And so again, they're a sponsor of mine. I'm biased because I get paid by them, but genuinely useful. If you want to check it out, here's the link. The president is set to announce Space Command headquarters at 2 p.m. Eastern. It's a little bit too ravey of music for me. I mean, I like some techno, you know. This is a little bit too much. We will see what we get. And listen, it's all love. Y'all be safe. Market sideways. I'm going to get out of here. I'm green. I don't want to lose it. I'm the top 3 worst trader ever, but I don't want to lose the green I've made. Okay. Tomorrow, we should have a lot of people here tomorrow for Jolts, 10 a.m. Thursday, we're going to have even more people. And then Friday, we're going to have a bunch of people, thousands of people here for the labor report. So, be ready. As soon as I close this stream, I'm going to redirect you to tomorrow's stream, okay? If you do not sit and wait until tomorrow, on that page, your love's not real to me, okay? So again, as soon as we close this stream, we're gonna redirect you to tomorrow's stream. If you don't sit and wait all day until tomorrow, you don't really love me. I'll see you guys later. Y'all be good. Have a great day.